Welcome to another episode of the Anatomy of the Trade. Another trade from France that we're discussing this week. Let's just jump right into this. And this is the long-term picture, the weekly chart. France, what's your initial analysis right here?
Okay, well, hello everybody. I think that this is sort of indicative of a lot of what's been happening in the market lately, especially in some of the, pretty strong momentum stocks. Big cause that this is built, big trading range that it goes into after a pretty sizable sell-off from kind of the late 16 into middle of 17, breaks out, and then really doesn't have much in the way of backing up action, at least across the most obvious area of resistance. Travels all the way up with just minor little setbacks to the major kind of resistance from the highs back and all the way back in 2016. And you can see where I've got those numbers 1, 2, and 3. Those are significant bars. And if you look down at the volume signature of each of them, which I've used the kind of the yellow horizontal or vertical line to see, you can see that there's definitely demand pushing these up. But when we see volume spikes like this, we know that in addition to demand, there's also supply involved. Well, taking that into kind of consideration, after this breakout, we have what looks like sort of like backing up action at this top, and we go across for a number of weeks, and then we have this number 3 breakout bar that my entry was actually just before the breakout, looking at the kind of the testing of bar number 2, which looked pretty bullish at the time. So I got in. We get this nice weekly move up, and then it up thrusts, and all of a sudden, what looked like a nice rally out of this trading range is pretty quickly being turned around into a sizable reaction that goes all the way down to the previous what had been resistance to support. I don't know what's going to happen here, but it's obviously a change of behavior. So probably a trading range, a more pronounced trading range, is coming if that's the extent of it. But my exit, I had a stop loss just under that number 3 significant bar, and on the the big reaction last week, I'm out. I guess it was this week actually. I'm back out. So not a campaign.
Yeah, definitely. Well, I think the positioning for the campaign obviously would be very difficult as we overcome perhaps an all-time high here, or just a significant high like this. So we usually would have around the all-time high, and again, I'll have to check on this. France, do you know that this was all-time high?
I forget. I think it was.
Okay, well, it doesn't matter that much. So when we overcome the all-time high, so I started adding abbreviation to this type of the event. So we usually would overcome, and we would have a major sign of strength above, so that's the new abbreviation here, above the all-time high. All-time high. And then what comes after? A backing up action. Let's just say above, but it's really not necessarily above, it's like around. So we basically should have something like this. Why would we have something like this before moving up? Because there is some profit taken by institutions if this is indeed a campaign, and the price will go up. So as they take profit, that creates a change of behavior, and that leads to a trading range, which is basically this backing up action above the all-time high. So we need to enter somewhere here around this area. Is there a trade here then? That's the question. And yes, there is a trade, and it's a swing trade, and it's a short-term swing trade. So that would be the logic here at this spot, how we would be thinking in terms of what's available to us in terms of the trade, especially after this type of move up. Okay, well, let's go to the daily and let's see how we entered and how we exited this position. Franz?
Okay. And I really, really like that, the behavior of a major sign of strength at the all-time high. And I think and I checked while you were talking, that was the all-time high.
Okay.
But I think it's a great tool to have in our toolboxes, in a great kind of way to recognize a situation, a particular structure, and be prepared for it. So at any rate, here was the actual trade. You can see that we had sort of a range between about the beginning of the year and towards the end of February that we broke out of on really nice volume. But one of the things that's a little bit of a concern here is that all of that buying, all of that volume, or a big part of it anyway, happens right at the beginning and then kind of peters out a little bit without a whole lot of progress. So that might have been a bit of a red flag for me, which I didn't pay enough attention to. But at any rate, we establish, it almost looks like a bit of an uptrend. I mean, it's sort of a flattish uptrend, but higher lows, higher highs. And as we're coming back towards the kind of the demand line of this little bitty uptrend, I decided, okay, well, I see that increase in supply at the beginning, and I'm thinking, okay, well, there's exhaustion before that, so maybe a relatively safe place to put on a position, which I did. Could have been better timing because we went down, and it's not much of a significant bar there. I've got it highlighted in gray, but it is a bit of a, it's at least an attempt to break out a little bit from that previous selling bar. So we didn't really come down and test much below that. So that was a little bit encouraging. And then another one of these, a whole lot of demand, or a whole lot of volume, I should say, comes in right after, it's about the 20th or thereabouts. But once again, look what happens. I mean, you run out of buying, and look at how price is reacting. It's just showing that there's just no momentum here, that there's no real ability to carry, for continuation. That should have been at a point where I would have recognized that something's going on here and maybe moved, instead of having my stop all the way down where I did, maybe move that up. But I didn't. And after that inability to move up, all of a sudden, and look at that bar right around the 6th, that big supply bar, that should have definitely told me to move my stop up, because that's saying, hey, all hands on deck, be alert to what's going to happen here. And I didn't. And so that's what happened.
Mm-hmm.
But I think this is somewhat typical of a lot of trades that, of kind of strong momentum stocks, all of a sudden are losing their mojo. So.
Mm-hmm. Yeah, for sure. Yeah, this is like this transition period that we're having. Again, I think the analysis starts on the weekly where, we're seeing that we might be in the consolidation. So with that idea, we want like a very small short-term trade. The breakout is okay in this area right here because the price extends over the resistance. And then the testing of that is kind of above this bar with a small, spring into this, into the body of this bar. So this spring is also viable in terms of the swing structure of a trade. And then we are starting to exhibit a little bit of, signs where, supply starts to take effect. So for instance, a bar like this, a bar like this, then this volume signature where we see some selling. And then I like the exhaustion comment here, Franz. So we're just going nowhere. So it's kind of surprising to see both even demand just going away from here. And then demand occurs, and what's the result of it? We are breaking out, but this break is not extending too much above the resistance like it did here. So that's a warning sign from the demand that, if we had some warning signs from the supply here, this is the warning sign from the demand. And I think that here we just kind of tactically go through this trade. The initial test is okay. I absolutely agree with you about this bar. It just shows too much supply after inability of the demand to push the prices up. So I think this was a bar of timing to move the stop loss. And,
Yep.
then the question is, where do you move it? So probably below this bar, because with the swing trade, you don't want to give up a lot. And this would put you on a break-even line at around 19. So this could have been a break-even trade, although it is probably just a small loss here. And that's it. That's all she wrote. I mean, like, there is nothing to this. It's just that. And obviously, this is a very telling bar where, you have to give up and capitulate this swing trade. And you definitely cannot have a long-term trade here in the context of the much larger structure. Okay, well, Franz, let's go through the post-analysis. So, bias, what would you say?
It was still up, like maybe
Okay, so
50-50.
50-50. Yeah.
Yeah,
Timing.
I didn't really like the timing.
Yeah, let's do 50-50 because for a swing, I mean, like, just depending if this is a short-term swing, I mean, like, you could have exited somewhere here,
Yeah.
and that would be the trade.
I really like that spring that you pointed out around the beginning of March. Yeah,
Okay,
so
but
that
we were
that
not available there. Yeah.
yeah,
Okay.
right.
Character,
Nah.
probably no. Okay, point of entry. Yeah, let's give it a yes. Stop loss. Stop loss could have been moved a little bit better, right?
Yeah,
On
maybe
the entry,
50-50.
50-50. Yeah. Add-ons, there were no
There weren't
add-ons.
any.
And exit, yeah, also 50-50.
Yeah.
Okay, so we have 1, 2, 3 out of 6, so 50%. Okay, so what are your comments, lessons here?
I'm going to go back and I'm going to play this anatomy of a trade and study what you said about major signs of strength at all-time highs. And I'm definitely going to take notes. I'm going to make that. I'm going to burn that into my brain cells for future reference.
Okay.
So that's the first thing. So major sign of strength at ATH. And I think that's probably the kind of the big takeaway from this.
Okay. I would also add that the intention of the trade is very important. So the intention should have been a swing trade. And then also the stop loss movement once we have, supply emerging here. So you want to protect your swing trade as soon as possible. Yeah, so those three. Okay.
I like it.
Yes. Well, Franz, thank you so much for sharing your trade. Thank you for going through this. And as usual, guys, thank you for watching. And until next week.
Thanks, Ramon. As always, appreciate it very much.
You're absolutely welcome.